insider trading is really, it sounds like it's a law, regulation, controls over the abilities of insiders to trade. But that's not what insider trading means. And if you are a trader, this is important because it's important you know what insider trading is so you don't get into trouble. Insider trading basically means that you cannot trade on, let's call it, ill-gotten information that is not public. So if you know it's not public and you trade on it, that is illegal. That is true for insiders, people in the company who obviously have significant information about the company that's not public, and therefore they have to be very, very careful when they trade, and I'll tell you how that is dealt with so that they don't get in trouble with inside information. But it is true of anybody who attains information that is not public, that they know is not public. If they trade, they can be sued and they can go to jail for trading on inside information. Now, insiders, corporate insiders, therefore, are restricted in when they trade. So one of the things that happens is, in order to prevent the appearance of insider trading for insiders, what happens is there are only certain days of the month, certain periods in which they can buy and sell. Those periods are always separated from any corporate announcements. So they're not before any corporate announcement. So it can't be perceived as if they knew what the announcement was going to be, therefore they traded. So the amount of bureaucracy and effort that goes into making sure that there is no appearance of insider trading by insiders is unbelievable. But then if you're not an insider, you have to be very careful. I'll give you the story of Martha Stewart. You know Martha Stewart from marthastewart.com, probably, Martha Stewart Everything. I guess she's still, you know, Martha Stewart's still big. She certainly was big, massive, huge in the 1990s. She was everywhere. She was on TV. She had her own TV show. She had her own brand. She really was everywhere. I think she's made a comeback, but in the 1990s, Martha Stewart was everywhere. Very wealthy, incredibly successful, an amazing entrepreneur, Anyway, in 2001, Martha Stewart sold all her shares in a biotech company, I Am Clone. 2 days later, I Am Clone fell 16% after it was publicly announced that the FDA had not approved I Am Clone's primary pharmaceutical product, doesn't matter what its name is. By selling her shares so close to the announcement, right? So close to the announcement, it immediately triggered an SEC investigation. What was going on here? She avoided, by doing so, a $45,673 loss. Really insignificant given her net worth. I think she was a billionaire at the time. It turns out that, and importantly, it turns out that the CEO of the company had also, not him, just him, his entire family, had all been selling stock, $5 million worth of stock, in the days leading up to the FDA announcement. So he knew the FDA was not going to approve the drug. He already had, quote, the inside information. He had been selling stock, and so had Martha Stewart 2 days before. Now, it turns out that he was clearly in violation of the law, right? He knew inside information. He traded on that information in order to prevent himself from losing money. It's unbelievably stupid of him, because this is like a straightforward application of insider trading laws. Everybody knows this. The SEC was bound to catch it. It's a classic case. It's not sophisticated. He didn't even try to hide it. He just did it. Got arrested, spent time in jail. But the case of Martha Stewart is a little bit more complicated, because Martha Stewart did not know that the FDA had indeed not approved the drug. So why was Martha Stewart, who went to jail, by the way, she spent 5 months in jail and had to pay a fine, 5 times the money she saved or something like that. What was the case? Well, the case was based on the fact that her broker told her that the CEO was selling his stock, and that the broker recommended that she sell. He didn't tell her why the CEO was selling his stock. Maybe he didn't even know. He just told her that the CEO was selling the stock. Now, yes, that's not publicly available information, but it's bizarre. Martha Stewart did not have any fiduciary responsibility to the company. She was not an officer of the company. I mean, you could argue the broker had a fiduciary duty to the company because he was the company's broker or had a relationship with the broker, and he was revealing private information. You could argue that the broker broke his fiduciary responsibility to the CEO by letting somebody else know what he was doing. But what did Martha Stewart do? She got some information from the broker about somebody selling stock, and she sold. And yet the government viewed that as insider trading. Best friend Hank wants to cancel me. Why are you canceling me? What did I do? What did I do? I missed the thread where I did something deserving of a canceling. Now, the problem for Martha Stewart was, in the end, not just that she had traded on non-public information, but that she lied about it. She told investigators originally that she had a stop loss, that it was an automatic trade, which is not true. She clearly sold because the broker told her to sell based on the fact that the CEO was selling his stock. In the end, if I remember right, I didn't get this in the news stories, but in the end, I think what the government really got her on was an obstruction of justice. They got her on line. But they went after her for the insider trading. Now, why is insider trading, why do they take insider trading so seriously? Remember, she went to jail for this. Why is insider trading such a sin that at least 2 hedge funds have now been destroyed? Cohen's hedge fund and another hedge fund run by a guy with a very long Indian name that I cannot pronounce. Their hedge funds have been destroyed because of being sued for insider trading. People spend a lot of time in jail for insider trading. Why is insider trading viewed so badly? And indeed, there's a massive debate within the field of finance about whether insider trading is good or bad. Because why shouldn't insiders benefit from insider knowledge? I mean, it's so absurd today. Let's say you work for a company. I don't know. Let's say you make software, and you just signed a big deal, and you're a publicly traded company, and you just signed a big deal with another publicly traded company, a big one, and you think them using your software is going to benefit them, so you go and you buy their stock. That's insider trading. Unless the entire world knows that you have sold the stock to this company, it's insider trading. You traded on information that only you had. And you could go to jail for that. You can't trade in the stocks of your suppliers or your customers. Theoretically, you can't trade in the stock of your competitors. Let's say you know that you have a great product coming out. It's going to crush your competitors. It's an iPhone killer. And as a consequence, you short Apple. Insider trading. Other people didn't know that. It's insane. Why shouldn't you? You invest in a career, you gain knowledge, you gain skill, you gain information. Why wouldn't we consider inside information part of your compensation for taking the job? For having knowledge associated with the job. Now, the reason we're giving is a moral reason and a practical reason. The moral reason is it's just not fair. It's just not fair. What about all those other people who don't have your information? And that therefore, if you're buying, are selling to you, or if you're selling, are buying to you, it's not fair to them. They wouldn't buy or sell if they had your information. So it's not fair to them. But that's egalitarianism run amok. None of us has the same information. None of us have the same knowledge. Indeed, the whole basis for trading is the idea that we have different levels of information, knowledge, and evaluation and assessment. We disagree about the price. But let's say that I think that a stock is trading at 10, and I've got information that suggests it should be trading at 20. So I go into the market and bid 12 for it. The person who sells it to me at 12 has just made 20%. He's better off, and I'm better off because I know it's going to go to 20. Let's say, so everybody wins. Yeah, he didn't win as much, but that's because he didn't have the information. That's reality. It's unfair. Information should be equal, like opportunity and outcomes. And it's stunning to me. It's stunning to me that nobody questions this. That egalitarianism, when it comes to the insider trading law, is just accepted across the board in our culture. Almost nobody questions it. Almost nobody challenges it. Right. If I think the stock is going to go down, I sell it. I sell it to somebody who buys it. Now here, they buy it, and it will go down. But they bought it based on their best assessment at a price that would have bought it anyway. Because I'm selling, I'm driving the price down, they're buying at a cheaper price than what they could have gotten it in the market otherwise. I'm saving them a little bit, you could argue. Nobody is actually worse off than they would have otherwise been. The point is not harm does to others. The point is not the harm. The point is the inequality. The point is the fact that we're not equal. Now that's the moral argument. What's the economic argument? The economic argument is, look, if insiders traded, then other participants in the market would be afraid that every time they traded, they were trading with somebody who had inside information. They would be fearful that they were being, in a sense, exploited by people with inside information. And therefore, they would be hesitant to trade. And therefore, people would trade less. There'd be less liquidity in the market. There'd be less participation in the market. The market would dry up. Now, I'd argue that if you're trading in the marketplace, particularly as an individual, thinking that you're not trading with better informed people, more knowledgeable people, you're delusional, because you are. You are already. So all insider trading laws do, is give people a false sense of confidence. But even if that's the case, even if markets dry up, or relatively speaking dry up, who's to say what the appropriate level of liquidity is? Who's to say what the appropriate amount of involvement of investors in the marketplace should be? What's optimal? Isn't it what the market determines under freedom? So it might be the case that there'd be less trading. It might be the case that fewer people would be involved in the market. So what? And by the way, there's little proof that that would actually happen. For example, Japan did not enforce insider trading laws until the 1990s. Certainly in the 70s and 80s, there was rampant insider trading in Japan. And yet, at the time, in the 1980s, Japanese stock market was the largest in the world. It had more trading than NYC. So at least the Japanese experience suggests that it's not true. In the 1920s, there was no insider trading laws in the United States. There was plenty of liquidity, plenty of trading going on. So it's not clear that the evidence is consistent with the idea, even if it seems reasonable to think that that would be the case, that liquidity would dry up. But again, so what? And here's the solution, at least my solution, to dealing with whatever challenges. Oh, so here's another objection to insider trading. So if insiders benefit on the way up from stock price movements, that's good, right? That's not harmful. So let's say I know there's something good is going to come out, I buy the stock, something good happens, I benefit, that's great. But imagine if a CEO shorts his own stock, buys put options. Put options are a way to benefit when the stock goes down. Now the CEO has an incentive to mismanage, to do harm, because he'll make money if he does harm. Now that, I think, is wrong. But that is wrong because it's harmful to shareholders. And therefore, I think shareholders should make sure that in their contracts of managers, they have a section that says, as part of your trading, you cannot short or buy put options on our company, on our industry, on whatever. You set the parameters. And every company could do it a little differently. And there'd be competitions, just like there's competition for wages and competition for benefits and competition for all kinds of other aspects of the business. There'll be competition around the kind of permissions allowed for trading. And it's very easy contractually, and shareholders, I think, would demand it, to ban board members and senior executives, maybe all employees in the company, from trading against the company. And he solved the problem through contract law. But I'd even say there is another solution that is even more interesting in my view. Imagine a world in which we have multiple stock exchanges. I mean, really multiple stock exchanges. Not like today where we have multiple stock exchanges, but are all made to be exactly the same through regulations. But imagine we had private, independent, unregulated, laissez-faire stock exchanges that competed with one another and that made money when you traded, made money when companies listed, and made monies off of your trading. So a certain something. Every time you trade, you paid a fee to the exchange for the trade. Imagine if that were happening. And imagine now that these stock exchanges now have an incentive to see a lot of trading going on. But they also have an incentive to get companies to list on the exchange. So they have to be both investor-friendly and company-friendly. And they have to find the right balance. And maybe different exchanges find different balances. So let's say one exchange says, we place no restrictions on insider trading at all. You can trade anything, anytime, anybody. And let's say another exchange says, no. We have very, very, very strict controls over insider trading. And let them compete. And if they compete, we would then see, from an economic perspective, what makes the most sense, what system makes the most sense. And it might be true that some companies, it is better, one regime is better, and for other companies, a different regime is better. Why do we assume that everything has to be the same? I mean, this is one of the many problems of regulations is the uniformity of them. When it's not clear that different companies should behave all the same. You could also think about accounting standards is the same way. We now have accounting standards. All companies have to file accounting based on the same FASB standards. Why don't we have competition of accounting standards? Why don't different firms file based on different accounting standards and let the market sort it out? Because we don't trust markets, and because we are egalitarians. We're driven by an egalitarian philosophy. And we're driven by an egalitarian philosophy that does not abide for people. Yeah, gap accounting. Why does everybody do gap accounting? We don't trust individuals. We don't trust individual companies. We don't trust exchanges. But we do trust individuals. We do trust individuals when they are motivated not by profit. We trust individuals when they're motivated by the public interest. We trust individuals when they're motivated by the common good. We trust individuals when they work for the government. We trust individuals at the SEC almost blindly. Luckily, the people working for Elon Musk don't exactly. We don't trust individuals who run companies. Why? What is it that makes individuals who run companies untrustworthy? It's that they're self-interested. It's that they're driven by profit motive. It's that they're not good altruists, not good sacrifices. But we trust the people at the Federal Reserve. We trust the people at the SEC. We trust the people in Congress sometimes because they're motivated by bigger things, by a higher cause. God. All right. So in a free market, some insider trading would be banned contractually. Other insider trading would be banned through exchanges, again, contractually. The government would have no business regulating trading unless fraud was committed. And what Elon Musk did was not fraud. I mean, shareholders might be angry with Elon Musk for disseminating kind of vague, non-objective information. The company might be upset at, the board of directors might be upset at him. None of the SEC's business. None of the government's business. The government is there to protect our rights. Not to get into our lives and dictate how we behave, what we do, how we live. But that's exactly what they've been doing. And let's be clear, insider trading laws are a lot new. This is not the Biden administration. This is not neo-Marxists. Everything bad is neo-Marxist these days. No, this goes back to 1934 securities legislation that established the SEC, 1934, and has been reinforced and grown and reestablished and recommitted to, and budget grown under every administration, including Republicans, all Republicans. So it would be nice to get rid of insider trading laws. Maybe one day, maybe one day.
And to begin with, I wonder if I can ask you to capsulize, I know this is difficult, can I ask you to capsulize your philosophy? What is Randism?
First of all, I do not call it Randism, and I don't like that name. I call it objectivism.
All right.
Meaning a philosophy based on objective reality. Now let me explain it as briefly as I can. First, my philosophy is based on the concept that reality exists as an objective absolute, that man's mind, reason, is his means of perceiving it, and that man needs a rational morality. I am primarily the creator of a new code of morality which has so far been believed impossible, namely a morality not based on faith.
On faith?
Not on faith, not on arbitrary whim, not on emotion, not on arbitrary edict, mystical or social, but on reason, a morality which can be proved by means of logic, which can be demonstrated to be true and necessary.
All right, all right.
Now, may I define what my morality is?
All right.
Because this is merely an introduction. My morality is based on man's life as a standard of value. And since man's mind is his basic means of survival, I hold that if man wants to live on earth and to live as a human being, he has to hold reason as an absolute, by which I mean that he has to hold reason as his only guide to action, and that he must live by the independent judgment of his own mind, that his highest moral purpose is the achievement of his own happiness, and that he must not force other people, nor accept their right to force him, that each man must live as an end in himself and follow his own rational self-interest.
May I?
All right, before we go on, reminder, please like the show. We've got 163 live listeners right now, 30 likes. That should be at least 100. I figure at least 100 of you actually like the show. Maybe there are like 60 of the Matthews out there who hate it. But at least the people who are liking it, you know, I want to see a thumbs up. There you go. Start liking it. I want to see that go to 100. All it takes is a click of a thing, whether you're looking at this. And you know, the likes matter. It's not an issue of my ego. It's an issue of the algorithm. The more you like something, the more the algorithm likes it. So, you know, and if you don't like the show, give it a thumbs down. Let's see your actual views being reflected in the likes. But if you like it, don't just sit there. Help get the show promoted. Of course, you should also share. And you can support the show at JeronBrookShow.com/support, or on Patreon or Subscribestar or Locals, and show your support for the work, for the value hopefully you're receiving from this. And of course, don't forget, if you're not a subscriber, even if you just come here to troll, or even if you're here like Matthew to defend Marx, then you should subscribe, because that way you'll know when to show up. You'll know what shows are on, when they're on. You'll get notified, right? So, yes, like, share, subscribe, support. Like, share, subscribe, support. There you go. Easy. Do one or all of those, please.